Hello YouTube, hello traders. Once again, I would like to welcome you to my YouTube channel. In my first video, I mentioned that in this channel I'll be sharing my journey while learning the ICT 2022 mentorship. And this is it, guys. I've started learning the ICT 2022 mentorship, and currently I've watched the first 3 episodes of the ICT 2022 mentorship. In the first episode of the ICT 2022 mentorship, ICT just introduced the course. He mentioned the things that we should expect and the things that we shouldn't expect from the mentorship. And in his second video, he talked much about the elements to trade setup, which are the things that forms a profitable trade setup. And these things involve us going into the higher time frame, which is the weekly time frame, to see the direction of the weekly candles, and this can be done during the weekend, whereby we're expecting the next coming week's trading. We can go in the charts to look for draws to liquidity, which are the swing highs, swing lows, and the gaps. Secondly, he talked about to select the daily bias, which is the direction where we think that the daily candles are gonna go. This also involves about selecting the valid short-term highs, short-term lows, fair value gaps. These are the areas where price will likely draw to. After that, he mentioned about dropping into the 1 hour time frame where we mark the short-term highs and short-term lows. These are the areas where price will likely go to, and after selecting the short-term highs, short-term lows, which are opposite to the direction where we think the market is gonna go to, if we are perceiving higher prices, then we should look for short-term lows, which are likely to be lined to. If we are perceiving the lower prices, we should look for short-term highs, which are likely to be lined to. In these short-term highs and lows, he mentioned that there is liquidity that resides there, so price will likely go and sweep those short-term highs and lows. After selecting the potential highs and lows likely to be swept, we go into the 15-minute time frame where we also select the short-term highs and lows, and we drop into the 5-minute, 2-minute, 1-minute to look for market shifts. And after the market shift has been formed, we look for a fair value gap in the price leg that caused the market structure shift. And in this fair value gap, it's where we take our entries. If it's a long, we take our longs. If it's a short, we take our shorts. And the stop loss can be pressed on a swing high before the fair value gap, or the swing high of the candle that caused a fair value gap. And on the targets, we look for the previous highs and lows which have not been tested, and we can also look for the fair value gaps or the gaps in the market. Those can be our targets. So without taking much of your time, let's get into the charts and see it by ourselves. Hi, so we are here, guys. As we said from the beginning of the video, that we'll be going from the weekly chart into the daily chart, and from the daily chart we'll be dropping into 1 hour chart, 15-minute chart, and finally we'll be going into the lowest time, which is 5-minute, 3-minute, 2-minute, and 1-minute. So in the lowest time, it's where we'll be looking for our setups, where we'll be looking for a shift in market structure and the formation of a fair value gap. So let's start with our weekly direction. So this pair is Nasdaq, which is also symbolized by NQH 2025. This is our weekly chart, and what we're supposed to do, according to ICT, in his second episode, he mentioned that in the weekly chart we are to predict the direction of the candle. Where the candle will close. Is it gonna close on the downside? Is it gonna close on the upside? That is, we should predict whether the candle is gonna be bearish or it's gonna be bullish. This does not mean that we should predict where the candle should reach or how big the weekly candle is supposed to be, but we should only predict where the direction of the weekly candle is gonna be. So to do that, there are a number of factors that we consider. some of them being seasonal tendency, interest rates. Those are to be learned in the coming lessons. But for now, by looking at the market structure, we can see that there is this odd low here, and there's another odd low here, and we can see that there's this odd low. So price can come to sweep the liquidity of this odd low, because under every odd low there is liquidity that resides there. So we can see that in this week, this is the week that we are trading in, and let's assume that we are in this week and we didn't know that this candle was gonna be bearish. So we are supposed to predict the direction of this candle, and this could have been on Saturday, and then we are to predict the candle of the coming week. So in order to do that, we would have marked this low here as well. We're expecting the price to go to. So we'll mark it with our trend line. We are to mark it with our trend line. And we are here, so let's mark this odd low with a trend line. We'll select this trend line and we'll come here to mark this odd low, and we can name it so we can mark it as an odd low, a low where we are expecting the price to go to. And after this, we are supposed to go into a daily time frame. We are supposed to go into a daily time frame, and this is our daily. We can see that the trend line that we pressed on the odd low has been transposed into our daily chart. So we can see this was that low which formed on a previous week, and this was another low that formed on another previous week. So here we can see that the week that we said we were expecting the price to go below this odd low has started, and yes, it has been going down. It has been going bearish. So this was on Thursday, this candle was on Friday, and this is the candle that finished the week. So we're assuming that this was the candle that finished the week. So we're assuming that we were here on Saturday and we were to predict the direction of the weekly candle. And how are we gonna predict the direction of the weekly candle? We already mentioned that we were going to follow some factors, which are seasonal tendency, interest rates, and also the market structure of the daily candles. So here we can see that on Friday it was a buy candle, and here on Monday we started with another buy candle. This buy candle went to fill this gap here, which is the fair value gap. So on a daily we can mark this fair value gap where the price wanted to go, and price went into that fair value gap, so we can give it gray color. This is where the price went to fill this fair value gap, and then it started dropping on Tuesday. On Tuesday it dropped, on Wednesday it dropped, on Thursday it dropped, and on Friday it also dropped. So we can see that the dropping of the daily candles are trying to sweep the liquidity on this short-term lows. This short-term low, this short-term low, and this short-term low. This short-term lows has been swept on Friday, and we can see that there is this another odd low which has not yet been swept. So yes, we are still expecting more prices. We are still expecting the price to go and sweep this liquidity here. We're expecting the price to go and sweep this short-term low. So now, if we were here, let's assume that we are here and we would have marked this as an odd low that we are expecting the price to go and sweep. But now that the price has swept this one, let's go into our 1 hour chart. We'll go into our 1 hour chart. This is our 1 hour chart. So actually you can see that this is our 1 hour chart, and this is that odd low that we marked on a weekly chart, and it has been transposed into the 1 hour chart. And this is that fair value gap that we marked on a daily, and it has been transposed also in the 1 hour chart. Now in the 1 hour chart we are going to mark the Friday's close, which can also stand as the Monday's trading. So this is the Friday's close, and we can put it as Monday's trading, as the start of Monday's trading. And we'll go into the previous week and mark the Friday's close also. Here we are, and we can mark this as Friday's close. We can mark it as Friday's trading, and this is Monday's trading. So here we are on Monday. The price action went to fill this fair value gap, which formed in a daily chart, and it has also been transposed into a 1 hour chart. Now on this Monday, price went and swept the liquidity which was from the other week, which was formed on Sunday, so which was formed on Friday, I mean. So here we have got this liquidity. So we can mark this as a buy side liquidity. And also we see here on, this is on Monday, price formed this high of the week and it started dropping. And here on Tuesday, price went to sweep the short-term low which formed on Monday. So we're gonna mark this short-term low which formed on Monday. Let's zoom it a bit so that we can see. All right, so this is that short-term low. We are saying that it was formed on Monday, and this is the high that formed on Tuesday. So we're going to take that trend line again and mark this odd low. So you can see that it's a small move above the odd low. It's a small move above the odd low, but still it is what? It is a sweep on liquidity. So we're gonna mark that. We're gonna mark this as buy side liquidity. This is buy side liquidity, which was formed on a 1 hour time frame. Now we are going to drop into a 15-minute time frame. This is our 15-minute time frame. I've dropped into the 15-minute time frame, and we'll see that this is the order that was formed. This is the order that was formed on Monday, and price went and sweep that liquidity there. So by zooming it in, we're gonna be able to see clearly what happened on that day. We are going to see what happened on that day. So this one has been swept on, that's on a daily. Let's mark also, let's mark the Tuesday's trading day and see. Yes, so this is where the Tuesday's trading has started. This is the midnight candle of Tuesday. This is the midnight candle of the Tuesday. Then this is Tuesday. Price has been going a little high, and it consolidated here, and it went to sweep this liquidity here. So you can also see that on Tuesday, this candle swept this liquidity here also. This candle went to sweep this liquidity. So we can mark this as a sell side liquidity. So I can mark this as a sell side liquidity. Of course, it's a small one, but still it is a sell side liquidity. So you can see that on Tuesday the candle went straight ahead to land this liquidity, that short-term old high. Now we are going to drop into the 5-minute time frame. We are going to drop into the 5-minute time frame to look for a shift in market structure, as we have seen in the 15-minute time frame that the liquidity has been landing to. Now we are going to look for a shift in market structure. And here we are. This is on that Tuesday. We can see that there is this odd low. There's this odd low formed before the market swept this liquidity. And there's another odd low here also, which was formed before the market swept the liquidity. So here we can mark this one as a all right. So market structure shift. We can mark this one as a market structure shift. Others also refer to it as a break in market structure, because the structure has been broken. This structure has been broken here, but still we are marking it as a shift in market structure, because ICT in episode number 2 he mentioned that a shift in a market structure is a break in market structure on a short line, while a break in the market structure is a break on the market structure on a long run. For example, on a daily, if the structure has been broken in a daily, it means that that's a break in the market structure, because the price is gonna move like big time. While when the structure has been broken in a small time frame, this is referred to as a market structure shift, or a shift in market structure. So let's put this at the right of the line, and now we are going to drop into a 3-minute time frame. So we can see that the price swept this liquidity here. This is that high that we marked on our 15-minute time frame, and dropping into the 3-minute time frame, it has been transposed, and here is a break in market structure, and this is another break in market structure. So by marking this break of market structure, we are going to mark this as a fair value gap. So a fair value gap is a free candle pattern. There is this candle here, and this candle which has been given some space here. This gap between these two candles, this is a fair value gap. So this is the bearish fair value gap. So let's give it this color, and let's light something like 3-minute fair value gap. We can also continue to say this is our what? Entry. We can say that this is our entry. So once the price has broken this structure here, we go into the price leg that broke the market structure to look for a gap, which is a fair value gap, this gap which has formed here. And once price has reached this fair value gap, it's when we take our entry. Once the price has reached this fair value gap, we can take our sales here. We will sell here and put our stop loss above this low. So let's mark this low as our stop loss. So this is our stop loss, and for our target, we are going to look for an odd low which has formed. It can either be the odd low of that trading day, or else an odd low of a previous trading day. So we're going to mark this odd low of that particular trading day. This is Tuesday, and we are marking this odd low that formed on Tuesday as our target. As ICT mentioned in this teaching, that we should look for low-hanging fruits. These are the targets that can easily be hit. So as we are learning, let's try to look for those low-hanging fruits, and I'll mark this as my take profit. Then I'll mark it okay. This is my take profit. And we can see that this was our entry, this fair value gap, which formed on a price tag that broke the structure here. Once the structure was broken, we were looking for a fair value gap in a price tag that caused a break in market structure, and then price came and retest that fair value gap. Once it reached on that fair value gap, we were taking our entry here, a sell, and then this was our first target, which was the odd low that formed on Tuesday, and the trade was also taken on Tuesday. So before I forget, one thing that I see also mentioned was about time. The time that we are going to expect the trade setups, the time that we are also going to execute our trade setups. So he said that we should hunt for this setup between 8:30 to 11 a.m., which is the New York time. So in order to be in line with what ICT said, we had to set our time here, which is UTC, New York local time. So we can see that the setup was also formed between that time. This was 8:30, around 8:30. It's when this candle which formed at 8:33 was the candle that formed that fair value gap that market went and tested. So we can see that the candle that first hit the fair value gap was the candle that formed at 9:42, which is the time that ICT mentioned that the setup should form. and the entry should be taken. So without saying much, this is what I've learned from the ICT 2022 mentorship episode 1 to 3. So yeah, this is it, guys. Be there as I'll continue sharing with you my journey while learning the ICT 2022 mentorship, and hopefully I'll be posting my videos every week. That is, I'll be posting 1 to 2 videos a week. And if you haven't subscribed to my channel yet, please hit that subscription button and don't forget to hit that notification bell so that whenever I post another video, it should notify you. Thank you, guys.